The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the day with the DAX index, just like we usually do. We've got to do something a little bit different today, though, folks, because it's just not necessary to look at the DAX on the hourly chart. We must also look at the DAX on the daily chart, because as you can see here on the daily, we are completing an ABCD pattern on the daily chart. If you look at this closely, you can also see a three-drive pattern going back from mid-June to where we are right now. That is a perfect ABCD pattern coming in there, 12,900 in the DAX. So this is something that is very, very interesting, especially when we're seeing this happening in the NASDAQ and we're seeing it happen in the S&P, and not so much in the Dow. The Dow is a little bit different, but that's pretty much what we're watching here on some of these things. Remember, this is the lunar eclipse, full moon. That comes in at 4:40 in the afternoon, I believe, today. So that'll be very interesting. There's been a lot of scuttle today about these gold find that the South Koreans found with the Russian freighter and stuff, but Norm Winsky sent me some information that it was all a hoax, and then David White pretty much dismissed the hoax, that it was actually for real. So who knows? What you hear is not always the way it is, but the truth will eventually set you free. But we don't know what that is right now. The way the gold's been acting, it certainly looked like there's a lot of gold out there, but that's not the kind of gold that hits the market, folks. That's museum type gold, I believe. And here again, I'm only speculating on that. Let's take a look at a few of these markets. As remember yesterday, folks, we were talking about Facebook. It had that huge drop. It stopped right at the 78% level, which was $165 a share. In the middle of the evening last night, after that big drop, Facebook rallied all the way back to 183, and it hasn't been able to take that out yet. To me, that is relatively important because 183 was a 382 retracement of that whole drop between 216 and 165. I believe it's trading around 177 here this morning. We're also seeing some very big moves in Twitter. And if you'll remember, we had one of our very good friends on, Al Larson, on. When was it? It was about a month or so ago, when Twitter was trading at around 30, and he was saying that it had a very strong cyclical bias to the upside. And as you can see from this Twitter chart, we went all the way up to almost 48. The ABCD on that particular structure, if I drew it correctly, and I think that I did, comes really close to the high. We had it scheduled to come in around 48.10. And the high was 47.30, so that was within about 7 cents of where it could have been. The most important thing about this Twitter chart, folks, is what happened where they have that notation there that this is important, where it gaps above the 78% level. Folks, when you see a pattern like that, boy, don't stand in front of that. There's three reasons for that. Look at the trend that's going up. I mean, it is very, very strong trend to the upside, and when it gaps above a 78% level, that's extremely important. You can see the same thing happened in early January, where it gapped up quite a bit, and then it came back and filled the gap just absolutely perfectly in April, down at $25 a share. And right now, if you'll notice, we closed at 43 and change, I believe, in Twitter last night. And if you look at the black marking on the right, where the current price is at 37.80, that puts it down pretty close to 20%. For the day, which is a considerable amount, for a stock like Twitter. But again, look where it is. It's right back to where it gapped out, If you'll see that big gap that we had in early June at around 37, that's come right back to fill that gap. So that's very important to to watch this. Why that happens, I'm not really sure. So we'll see. I don't have all the charts for the FANG stocks, Apple and Google, Amazon. I did have the Amazon up, I believe. I wanted to go over Amazon because yeah, we're trading here. I'll just bring it up here so you can see it here. We had what appeared to be a 3-drive pattern until this morning, and now if you look at the far right over there in black, you'll see it's trading at 1886.06 per share. That was the last I checked on it. But here again, another huge earnings because of the cloud or the thunder or whatever it happens to be, and that's pretty much what it's done. I think Apple is the only one that is not blasted off into new high ground. But remember, folks, you're only looking at about 20 stocks in that NASDAQ, and that's not really a fair assessment. The overall market is not showing that at all, and we've talked about it, several times, because it is important, the fact that the overall market is not showing that bullishness, that we're seeing in some of the others. You can see this in the New York Stock Exchange Index as it's compared to the NASDAQ. But the NASDAQ is, it's a NASDAQ 100, but you're talking about 12 stocks. Look at, I think someone said yesterday that, not FANG, what was it? Facebook had like 25% of the value of that. Now, I don't know if that's true or not. I don't see how can that be because Amazon is a much more expensive stock and it has more capitalization, I believe. But, this is what I'm looking at. Someone's asked a question about Bitcoin. Just change the subject here for a little bit because I do think we need to check with Bitcoin here for a second because the ruling came out today. Oh, dear. Don't tell me the stock. Oh, there we go. Hold on one second here and we'll get this up here so you folks can take a look at it. You'll notice here the high that we made just the other day at this 80, right at around 8,500. That was a 61% retracement from the high that we made back in April when we were trading at 9,500. Now we're backing off, and we had a head and shoulders pattern there. This chart is courtesy of my good friend Kerry Sismansky of Harmonic Trading, and you'll notice that the support that he's looking at here comes in around the 7,000 level, and right now we're trading at 7,800, a little more than 7,800. But there was a ruling this morning by the SEC that the Winklevoss brothers, Tyler and Cameron, didn't get their ETF for the Bitcoin that they wanted to, and whether that'll mean anything or not. I will mention this, folks. Those of you that follow cryptocurrencies, there is something really big going on. This is courtesy of my friend John Jameson over in the UK, and that is that all of these other cryptocurrencies like Ethereum and Cardano and some of the others that are out there, and there's a lot of them, they did not participate in this rally that we've had from 6,000 to 8,500 in Bitcoin. They didn't go anywhere, and some of them actually went down. So that's a very, very interesting thing. Now remember, this is supposedly not about cryptocurrencies. It's about blockchain technology. That's what John says, and I have to believe that's where it's really coming from. So it's going to be interesting. When we get back, we want to discuss data for just a minute. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted the chart for gold, and if you'll know, this is a Thinkorswim chart, and if you'll notice, what it's showing there is the rollover between the August gold and December gold. And December gold is going to be trading at a much higher price because the carrying charges on the gold is because it's a high price item, and the fact that interest rates are still relatively low, but storage and insurance is still high because of the cost of gold is going to be trading at a much higher price. So when you see a gap like that, what you want to do is you want to go up and see what the data is that they're trying to tell you. And if you look really closely at this chart, it is showing the December gold. Well, if you know where December gold closed last night and where it's trading right now, you'll see that it's a big difference between the August and December. So you need to correct your charts like that before you do any trading. I hope most of you realize that, but it's important to double check your data. It's just very important to make sure you have good data, because if you don't have good data, you don't have good charts. That's pretty much what you're looking at. Now, we've been asked to take a look at a few of these stocks, the FANG stocks, but before we get to that, I want to show you another stock that's very, very important from a fundamental standpoint in the technical business, and that is, look at the chart of Intel here, folks. We had a 3 drive to a top pattern that stopped exactly at the 1.618 back on June the 4th, up there at 57. Then we had a big drop down to 48. We had a rally up to 53. And if you'll notice on the far right, today with bad earnings, or whatever the earnings were, I don't even know, but the market has gapped down in Intel a little more than 10%. And you'll notice it's trading at 48.65. That sets up a potential ABCD that's going to take it down to around 42. So whether that is going to happen or not, but with that big gap today, that would be certainly one of the things that I would be looking at if I was in Intel, that it has a ABCD structure coming in around 42. Now, again, this is just a pattern, and we're not looking at fundamentals at all. We're just looking at what the charts are telling us, and that's really what it's showing. So we'll take a couple look at some of these others that we've been asked to, these FANG stocks. The next one we're going to look at, of course, here is Netflix. We had a big move in Netflix up to 420. Then we had sort of a double top up there around 422. We had a big breakdown right to the exact 61% retracement of the April low. And then we had this little tiny bounce that rallied up into the 382. We're trading around 363 right now, but there's no pattern here that I can see in Netflix at all. And believe me, that is a very, very wild stock, folks. It jumps around, a great deal. So pay attention to that one because it really moves quite a bit. I've already talked about Twitter. Of course, it's not a FANG stock, but that's another one that does look relatively interesting. But here's one that if you had to put a gun to my head, and it's one of the best stocks that you can find, something that I use every day. This is Google. And if you'll notice here, we had that big gap up. We've been up here for 4 days after the huge gap up. The ABCD structure measures right where it's trading here at 1268 today. If you had to put a gun to my head, I would call the widows and orphans and talk to Sister Mary Perpetual and tell her that maybe you should buy a put, maybe a $1,200 put in Google, which wouldn't cost very much. But boy, this has got a beautiful ABCD with a huge gap up there, just hanging there, and that's usually not a very good sign from a technical basis. But I certainly wouldn't. I would, if I had to do this, and I'm not doing it, but if I had to do it, I would be looking at a out of the money put that would be interesting, and it wouldn't. I'm sure the cost of it would be quite small because of the fact that everybody thinks it's going to go up, and it might. But all I'm saying is, for risk-reward basis, that's the one that certainly looks really interesting without any trouble at all. Here's another one that I wanted to talk about because I would like to bring this to your attention because of the pattern and it's in the news right now, and that's the most expensive taco stand in the world, Chipotle Mexican Grill. You'll see that we had a 3 drive to a top pattern back here in 2015. It was a beautiful ABCD pattern that was there, spot on, pretty much as expected. But the thing that is the most important about this is what happened after that, and hopefully I'll be able to get this up here to show you what happened after that, and it's coming, so just be patient, boys and girls. At least I think it's coming. Let's give me one more chance here to see if we get it. Oh, 2 more chances. Oh, shucks, where is it? Oh, Larry, I just posted the darn thing. Oh, we've got someone calling in here. Let's double check what we've got here. Oh, we got a caller from New Jersey. Victor, are you there?
Cool, it came out. So ABX is the first one, and Intel. Where do you think they're going?
Well, I just talked about Intel just a few minutes ago. We had a big gap down today. It's trading around 48 and change right now. The ABCD structure on that comes down to about the around $42 a share. So I think it's got another 15% to the downside. And that with that gap, it could even be more than that. But this is not a very bullish chart with Intel because it completed that big 3 drive to a top pattern back in June at 57, and now we're at 48. Looks like we're heading to $42 a share in Intel, okay, especially with the gap down.
And what about American Gold? And then I want to know, could GE turn into like Honeywell, or wait until next year and buy? Like if people sell for tax losses, GE's at 13.
I wouldn't touch GE if they let me trade it for free. I think that
really?
Company. Yeah, no, that company's got big problems, and there's no reason. It might not be much of a risk here, but I also don't think it has much of a profit potential, Victor. And that's what you really want to be focusing on is very small risk, but I don't think it has a lot of profit. But that's my 2 cents worth.
Okay. And what about ABX? I don't know. That stock had like a secondary offering a few years ago, like 11 or 13, and it seems never to get out of this price range.
Well, I don't trade ABX, but I am very bullish the gold. I believe we've had a major fib point down here at 1218, and I still think we got a chance to see gold go higher. But anything below $1,200 a share, I certainly can't be bullish on gold. But right now, the gold looks bullish to me.
Oh, who's manipulating it? It seems like somebody's like every day, like
You know, Victor, just between you and me, the scuttle on the street that it's Tom O'Brien down there in Clearwater, Florida, but that's just a rumor.
I think it's Trump's guys. They have those working men working the boards all day.
Nobody can manipulate the gold market.
Well, Reagan brought those guys in. They control the whole stock market. They give out money every morning.
The plunge protection team. Again,
you don't think they've been active for the past 3 years? One day they're going to fall asleep at the desk and everything's going to go down the tubes.
Well, I try not to think that way, but there's always that possibility.
China's manipulated. We're manipulated. I think the punch protection teams have been holding all these gaps up since he's been elected. Just like the GPA was 4% today. That's a bunch of hogwash. Our growth came out at 4%. That's a bunch of hogwash.
Well,
you know, it's like 2%. We haven't grown any, but the only thing that's grown is our health care bills.
That's probably
our wages
true.
Haven't kept up with the health care.
Well, listen.
Have a good day.
Yeah, thanks for calling in, Victor. I really appreciate it. And we have a commercial, Saved by the Bell, coming in pretty soon here, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to go into that CMG, the Chipotle Mexican Grill chart, just a little more in detail. I posted the daily chart. The weekly chart, of course, had the 3-drive pattern, and you can see the 3-drive pattern on the daily chart in that blue marking that shows the Thunderbolt ABCD pattern. But the important thing is the gap down. Now, because of the data that we use, the gap down does not show because of the weekly range, but it was a gap down, and we left a huge island reversal up there. And we went from $700 down to below $300. That thing dropped more than half, and of course now what it's done is making a 50% retracement. So that I'm just giving the technical picture. I don't know anything about it. I don't particularly like the restaurant. I've eaten it a couple times. Fortunately, I was one of the people that didn't get sick, but that's neither here nor there. And I will not talk any more about Chipotle Mexican Grill at all. I do want to talk just a little bit about the euro, because the euro and all of the euro and gold, all these things are really hooked up together here. And if we take a look here, you'll notice here that we have a real interesting pattern here. We almost made the 78% retracement. We still might because it's still early, but we've made higher bottoms at least since June 28th. Now and we also made lower tops, so that's not a good thing. But that's all related to that U.S. dollar index, and the U.S. dollar index is not acting nearly as bullish as the euro is bearish. What that means to me is the euro is actually finding some pretty good support, down into this area. Now, gold has so far held that level of $1,210 per ounce that we made last week. We had a $23 rally. We got up to $1,236. We backed off to almost the 78% level. So we'll see if that's going to be the same last night. Last night, Amazon traded at 1740, and now I don't think that's right, Dudette, because Amazon's trading at 1880. You mean it went up $140? Well, $140 only 10%, but I would double check your data on that. 1706, it went all the way down. But wow, I'd have to check that because that seems like an awfully wide spread. Well, there you go. TD Ameritrade, I would be double check that data. That's basically what I would. My data is not showing that at all, but I'm wrong too quite a bit of the time. So I would double check that data. The reason why I'm saying that, Maria, is because is the fact that that's a pretty big swing. That's a 10% down and 10% up. That means we had a 20% swing in Amazon in the last few hours. That seems like a pretty big swing. But hey, when you're the richest man in the world, you can do whatever you want. So that I don't know. Let me double check my data here, and I'll see if I show anything with Amazon anywhere near that price. Let's just get this up here, and we'll see here. The low that I'm showing, it's trading at around 1870 right now, and the low that I have overnight, hold on one second. The low that I had overnight, wow, 1701. You're absolutely right. That's an hourly chart. Let me double check. Go down to a 5 minute, see if it's well, I would really that I don't believe the data. And I'll tell you why. Let me put this up here, folks. This is a big stock, and a lot of people are in this, and I don't think they're going to let's just bring this up here to show you here again. This is why I use Jim Twentyman as my data source, because Jim runs the data for Commodity Quote Graphics, and believe me, his data is flat out perfect. So let's bring it up here. Where is it? Oh, shucks. Hold on a second, folks. I got to change the format just a little bit. There we go. Let me get this up here, and you'll see here, I am showing a 1701 print, but I don't believe it because that's a 5 minute chart. You're telling me it went from 1801 down to 1702 and then all the way and rallied $200 a share. I mean, even the plunge protection team is not that good. So I highly suspect that, boys and girls. That's my 2 cents worth, and I'm sticking to it. That's all I can tell you. So don't add any more to it than that. That's all I can say. I would be really interested to find out if in fact that were the case. Because if that were the case, that the market did that, boys and girls, the stock market is in big trouble if that's the case. You know what I mean? If that's the case, you'll be able to see. We'll see what's going on. Well, I do not believe the trading world is run by algorithms. These algorithms usually run for about 2 hours at a time, maybe even less, but it's not run by it. I know there's a lot of volume in them and stuff, but they're not that good, and no one can push it down that fast. I mean, you're talking about, look at the amount of money. That's billions of dollars that would drop, and there's no earnings there at that time. Let's get off it. Let's forget it. I don't believe the data is correct, but let's do this. someone that's really smart out there in data land, double check what that low is in Amazon today, and we'll discuss it on Monday, because I don't want to spend any more time. But I don't believe the data is correct. I mean, that's like a flash crash. That's a 10%, more than a 10% drop in one of the most expensive stocks in the world. And, you know, people are wanting to buy that stuff all the way down. So we'll see. Okay, someone's asked me to take a look at the feeder cattle, and I'll be happy to do that here. Just give me a second, and we'll bring up the feeders. I believe we were getting ready to see a correction in the feeders, but let me double check here. I got to remember how you spell feeders. I believe that starts with an F, and we'll get this up here, and we'll take a look at it here. Oh, dear. Just a sec. Speaking of bad data, we got another one here. Let's just get this, refresh it up, and get this thing working. Yeah, there we go. There we go. Yeah, we're starting to get a little bit of a correction now. This is what we were looking to see if that's going to happen. Let's get this up here and take a look at it, and then we'll see how we are. And you'll see the feeder cattle have backed off from that 78% level, only about 3 cents, but you know, it's completed the ABCD up in that area. The hogs are the one that's interesting, because, you know, we were looking at the, you know, buying the December hogs down there at 46. And let me double check to see how they're doing this morning. They were doing pretty good yesterday, and we want to get this up here to see how we're. Oh boy, they got all the way up to 51, and then backed off 4 cents. So it had a huge rally, and now we're back to the 47 cent level. That's a good buy in the hog, folks, because if it went to, let's just bring this up here and show you, because we were talking about this one at 46 and it rallied 5 cents. That's $2,000 in hogs. Hold on just a second here, and we'll get up here and take a look at it. You'll notice that we got up to 51 yesterday, and now we had a big reversal, and now we went right down to the 78% level again, down at 46.50. So my guess is that's going to be pretty close to what we were looking at. Now, remember yesterday we were talking about taking profits in the November beans up there at the 893 level. They did get to 895.5 and then sold down to 875. They dropped 20 cents a bushel. We're trading at 879 right now, and I believe if you can get these around 865 here in the next few days, it's going to be real interesting to see if it's going to do that. But we'll have to wait and see. We had a question about the Treasury bonds and Treasury notes. Folks, to me, these markets are headed lower. The $64 question is if they're going to rally at all before they head lower. So we'll take a break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a little trip down memory lane, and I think it'll be good for all of us to think about the psychology of the market a little bit, because it was 44 years ago. I was standing in the parking lot of the Promenade in Beverly Hills, which is now Rodeo Drive, and I was leaning up against my brand new car, and I had just ordered a brand new Mercedes-Benz Roadster from Beverly Hills Mercedes-Benz, and I had my Rolex watch on. I mean, I was really the top dog. I thought life couldn't get any better than this. And then a few short months later, like 9 months later, I had lost all of my trading capital. I still had a lot of assets left, but I lost my trading capital, and well over 7 figures. And that was actually a blessing in disguise, because that's what started me to really understanding and learning about the markets and, you know, why they went up and down, because I basically was long during a big bull market, you know, and just was dumber than a hoot owl, and like most of these guys that were doing the dot-com bubble stuff. But I always knew that I could make it back. It never even bothered me. I remember the final day, which was in October of 1974, when I was on margin call at Conti Commodity, and my last position was in cattle, and the cattle were limit down, and I was able to get out limit down, and I had a debit balance of $2,700, and I got out with a minus $2,700. This was before the CFTC. So the commodity firms, they basically ran the margins and all that stuff, so they had lots of flexibility. So Conti allowed me to trade in a debit balance. And I didn't trade for a couple of weeks, and I saw a move in pork bellies, and I made that $2,700 back. And then I didn't trade for well over a year, where I studied the Gartley book, and I really got into the Fibonacci stuff, and that's pretty much how I got. But anyway, I remember that very, very vividly. So, you know, some of these birthdays that you have, you know, you remember more than others, but that's one that I certainly remember. So, you know, just don't give up, you know, because, you know, what happened when I went back to the guy that got me started, is Dr. Noblin, and I told him what happened. He laughed at me when I went back, and he was trading he was in Kentucky at that time. And he just laughed at me. He said, "You think you're the only person ever to do this?" And he said, "Just go back and look at your P&S statements and see what you did wrong." And the one thing that I did wrong, more than anything else, and it's the number one thing on my painting behind me here in the office, is that I added the losing positions. I thought I was that good, that I knew more than the market. I was buying these 18-day lows in the market based on the Hearst stuff. And sure, they worked. They worked for about 3 days. They would go up for 3 days and then go down for 15 days. When you do that over about 3 cycles, it don't take very long to lose all your money. And that's, you know, pretty much, you know, what happened. But anyway, that's neither here nor there. But I did learn, you know, very hard lesson on it. And but that's goes back a very, very long time. That the funny part about it was when I bought that Mercedes-Benz, I think it was around $5,500 back in 1974, and I ordered it. And when it came in, the Mercedes-Benz guy in Beverly Hills, I couldn't afford it when it came in, and so he called me up and he said, could you come in? And I said, oh God, what am I going to do? I have to go in and pick up this car. And so I'd left a $1,000 deposit. And so when I went in to the Mercedes-Benz dealership to tell him that I wasn't able to get the car, he said, look, he said, we'd like to buy the car from you. We'll give you $1,000 profit. And here I was thinking I was going to get stuck, and I ended up making $1,000 off of the car. So, and the ironic part, they had 12 Mercedes-Benz in Beverly Hills at that time. And that was 1974, and they were all bought by the same person, Elvis Presley. So that was an old story. We'll see what's going on anyway. Back in the old days, yeah, no, that wasn't the Rain Man. Was not my dealer, but that was one of the old memory things that I had at that time. But who knows? Okay, someone asked another question about. It's about playing poker and stuff. Folks, when I play poker, I play Texas Hold'em, and I usually play tournament where you buy in for like $50 or $100, and you're playing against 200 or 300 people, and you get to play for 5 or 6 hours if you play really, good cards and only play, really good hands. It's pretty good entertainment, and I keep, relatively good records, and I know I'm ahead, so that's, basically what I'm looking at. But it's good entertainment, and while I'm doing it, I'm always thinking, about what's happening with the markets and relating the cards that you have compared to the positions that you have. When you're trading, you want to have the odds in your favor. And the odds that we look at are these patterns, and that's what we try to do. It's the same thing when you're playing good. If you play good cards, and you only get 2 cards in Texas Hold'em, you have to have 2 good cards. If you're going to play a 7 and an 8, that's not very good. Anybody with a 9 in their hands ahead of you. So you got to be able to play good cards, and you have to determine what those are by looking at the graphs of what the values of your hands are. But that's all related to probabilities and numbers, so we won't get into that. But remember that the poker is not a game of it's not a game of chance, because you get to determine when you want to play and how much you want to bet, and you can quit at any time. No other gambling game can you do that, because gambling's based on the toss of the card, or the toss of the coin, the flip of the coin, toss of the ball, blow of the whistle, roll of the dice, spin of the wheel, turn of the card, whatever that is. And when that's done, you can't do anything during that time when it's happening. Whereas in trading, you can get in and get out in a millisecond, because if you don't like what you're doing, you just literally don't have to stand in front of it. So we'll see if that's going to be the case. No, I'm not going to talk about politics in here. I won't, and I will not. And I just think what's going on is not good for our country, either right or wrong, left or right. It's not good. We live in the United States of America. Folks, I've traveled to 29 different countries over the last years, giving lectures and stuff. And the highlight of my trips is when I walk into the United States and I look up at that big sign and it says, "You are now entering the United States of America. Welcome." When I see that, that's the highlight of my trip. Even though I've had a wonderful time wherever I went, when I see that, that's about as good as I feel during that whole trip. So, just keep in mind, we got a lot of problems, but it's still not a bad country, to live in. So we'll see. You don't know my politics. No. Okay, let's move on here. Talk about another market, folks. We're looking at a 2-tier market, just like we've talked about. The Nasdaq has been the crazy one, and we see these stocks. The first example, they're talking about a $1,700 price of Amazon. In the morning. I posted that chart just a minute ago. That's from TD Ameritrade. And, it shows that the low was 1805. There was no 1701 print down there. That's a bad data. You got to check that stuff. That's if that's not bad data, this market's in big trouble. That's all I can tell you. That's my 2 cents worth, and I'm sticking to it. All right, we got another thing to talk about. Remember, folks, this Mercury retrograde yesterday. Mercury retrograde is when communication is all screwed up, and that's what we have right now. If you see something like that with the Amazon, that's a perfect example of Mercury retrograde. We have a lunar eclipse and full moon today at 4:40 in the afternoon, so we're going to have some big moves on Monday, so pay close attention. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any trial and pay absolutely. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to post a chart here of gold over the last 10 days. This is looking at a 15-minute chart. And if you'll notice that we made that low back on the 19th of July, and here we are over the lunar eclipse and full moon, and we have not made new lows yet, which is surprising. We did make a ABCD pattern down there at the 1217 level, and whether we're trading around 1224 right now, whether that level holds or not, we'll have to wait and see. But this chart is still trying to hold those lows that we made back at 1210, which was the long-term Fibonacci number going back to December of last year, December of 2017, when gold was trading at 1130 an ounce. And remember, the low before that was December of 2016, when gold was trading at 1030 an ounce. So we are still in an uptrend on this, but it hasn't moved very much. Gold has basically no friends at all, folks. And regarding the copper, someone's asked a question about the copper. Copper has not backed off very much, folks. We got up to 284 from our low at 268. It's still holding up relatively well. So I would keep an eye, keep a close eye on that to see if it's going to hold that level. But anything below 268 in copper is good night copper, because then you're going to be looking at something extremely bearish. So we'll keep an eye on that very, very closely. Next week, we have a couple of special guests, hopefully. We're trying to get Todd Gordon on from CNBC, Trading Analysis. He's a really smart fellow, and he'll hopefully share some of his ideas with us, along with Bill Meridian. We should have him on next week. So that'd be a couple folks that we like to see have as our guest. And then we'll see what happens. Next week, we have, beginning in early August, we have some really strong astro stuff, but nothing any bigger than what we have this week with this solar eclipse, this lunar eclipse and this Mercury retrograde. It's only 3 weeks that Mercury's retrograde, but boy, this thing has got some really good history behind it. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!